The S&P 500 lost over 2% this week as investors pulled cash out of tech stocks to prepare for the SpaceX IPO. Heading into the new week, Sunday, June 7, 2026. Like and subscribe for daily market updates. Today's agenda: Week in Review, Market Snapshot, Tech Sector Decline, Hard Assets Rally, Fed Rate Watch, Crypto Outlook, Geopolitical Risks. Now let's look at today's picture. This week in markets, we saw a sharp decline across almost everything. The S&P 500 ended the week down 2.25%, and the Nasdaq suffered its worst day since April 2025, dropping 4.26%. The Dow Jones also fell significantly. Why did this happen? It wasn't because the technology companies like Nvidia or Microsoft stopped working. Instead, it was a massive shift in available cash in the market. Investors were worried about the upcoming SpaceX IPO. They decided to hoard cash to buy shares in that event, which caused a sell-off in other stocks. We also saw Bitcoin drop below $60,000, falling 2% to trade at $62,096. Gold and silver did better, with gold rising 0.65% to $4,365. This week highlighted a major theme. Investors are reducing risk. They are paying down debt and moving money into safer places. The Federal Reserve is also watching closely. They are in favor of higher rates if inflation doesn't cool down. The jobs report came in strong, which pushed interest rate odds up for December. This creates a challenging environment for stocks, but might be a buying opportunity for hard assets like gold and crypto once the cash settles. Now let's dig into the news driving these moves. Here's where things stand right now, heading into the new week. Let's look at the specific numbers you need to know. Bitcoin is trading at $62,096, which is up 2.02% today. This is a positive sign for prices, even after the weekly drop. Ethereum is at 1,609, up 2.57%. Solana is doing well too, at 64.71, up 4.05%. XRP is at 1.13, up 2.93%. On the stock side, the S&P 500 closed at 7,384, down 2.25%. The Nasdaq is at 25,709, down 4.26%. Gold is trading at 4,365, up 0.65%. Oil is holding steady at 90.54. The dollar index is at 100.07. What does this mean for you? When the Nasdaq drops 4%, it means tech stocks are under heavy pressure. When Bitcoin is up 2% while stocks are down, it shows crypto is acting differently than stocks. Gold rising means people are looking for a safe place to store wealth. Oil staying flat suggests global supply and demand are balanced for now, though global political issues could change that quickly. The dollar index being flat means the US currency is stable right now, but watch the jobs report next week. Now let's look at how gold and silver are reacting. The biggest story this week is the decline in the tech sector. The Nasdaq fell 4% and suffered its worst day since April 2025. Traders are fleeing chip stocks. Why? The jobs report fueled bets that the Federal Reserve might raise interest rates again. When the Fed raises rates, borrowing becomes more expensive. This hurts tech companies that rely on borrowed money to grow. Also, major tech giants like Google, Meta, and Microsoft have reduced or eliminated share buybacks. This contradicts the old idea that there is plenty of cash in the market. Instead, cash is being hoarded for the SpaceX IPO. This creates a sell to buy dynamic. When investors sell tech stocks to buy SpaceX shares, tech prices drop. We also saw Nvidia fail to broaden the rally and Broadcom miss revenue company outlook. These are triggers that caused the flush. However, the underlying health of AI is still strong. Supply shortages are expected through 2026 and 2027. This means the decline is a temporary issue, not a permanent failure of the AI model. Investors should watch for signs that cash flow stabilizes next week. Now let's look at the Federal Reserve's next moves. While stocks are struggling, hard assets are showing strength. Gold broke below a key technical support level, but analysts see this as a buying opportunity. Gold prices fell in India as the global market weakened, but the overall trend is positive. Gold is up 0.65% to 4,365. Silver is also doing well. Why are these assets rising? There is global political instability in the Middle East. The Hormuz Strait is a critical shipping route. If that gets blocked, oil prices would skyrocket and inflation would rise. This favors hard assets over paper money. Also, the Federal Reserve is in favor of higher rates if inflation stays high. When rates are high, the dollar gets strong, which makes gold expensive for foreign buyers. But if the Fed raises rates too much, it hurts the economy. investors are worried about a recession. A recession would make people want a safe place to store wealth. Gold and Bitcoin are that safe place. We are seeing a rotation into these assets. This is a structural shift. As the debt crisis narrative matures, capital will move from stocks to hard assets. Now let's look at the crypto outlook for next week. The Federal Reserve is a major driver of market direction right now. U.S. rate futures are lifting the odds of a rate hike in December. This happened after a strong jobs report. The jobs report shows the economy is still strong, which means inflation might not be going away. If inflation stays high, the Fed will be in favor of higher rates. This is bad for stocks because borrowing costs go up. Mortgage rates are also expected to stay high. This makes it harder for people to buy homes. The Fed officials are warning that interest rate hikes are potential. This creates uncertainty. Investors are watching the Fed closely. If the Fed raises rates, stocks will likely drop more. If the Fed cuts rates, stocks might rally. The current situation is a mix. The Fed wants to cool inflation, but they don't want to cause a recession. This is a difficult balance. The market is in a managed state where stock prices can go up nominally, while available cash in the market is tight. This divergence is unusual. We need to watch the Fed's commentary on private credit stress. If private credit fails, it could trigger a broader recession. That would be a low probability but high impact risk. Now let's look at the geopolitical risks. Bitcoin is currently caught in available cash in the market squeeze with risk assets. It dropped below $60,000 earlier in the week. This indicates high correlation with stocks. However, the consensus suggests this is a structural opportunity rather than a fundamental collapse. The stuck Fed narrative and eventual dollar debasement likely to drive a medium-term recovery. Bitcoin is up 2.02% today at $62,096. Ethereum is up 2.57% at $1,609. Solana is up 4.05% at 64.71. Altcoins are following Bitcoin. Once Bitcoin dominance peaks, capital will rotate into altcoins like Solana and Ethereum. This is a positive sign for prices. Michael Saylor's SDRC instrument acts as an infinite glitch buyer. This creates artificial demand for Bitcoin. This has likely single-handedly ended the bear market. Retail interest in crypto is at historic lows. Institutional inflows are at highs. This means big money is buying. We expect Bitcoin to lead the breakout, followed by a sharp decline in dominance as capital rotates into altcoins. This is a classic bull market pattern. We are transitioning from a negative on prices cycle to a positive on prices one driven by institutional accumulation. Now let's wrap up the week. Global political events are creating a secular inflationary environment. Global political instability in the Middle East is a major concern. The Hormuz Strait is a critical shipping route for oil. If that gets blocked, oil prices would skyrocket. Traders are assessing conflict risks. Oil prices hold ground at 90.54, but this could change quickly. Hezbollah rejected a US-backed ceasefire. This adds to the tension. Iran peace deal uncertainty lingers. This creates a lingering pressure on oil prices. When oil prices rise, inflation rises. Inflation makes paper money less valuable. This favors hard assets like gold and Bitcoin. We are seeing a rotation into these assets. The market is in a managed state where nominal stock highs coexist with available cash in the market crisis. This means stock prices can go up while available cash in the market is tight. Eventually, hard assets will surge as the dollar weakens. This is a future scenario. We need to watch the SpaceX IPO capital flow and cash hoarding levels. If cash hoarding continues, stocks will struggle. If cash flows back into stocks, they will rally. This is a key turning point for the market. This week was a tough one for stocks. The S&P 500 dropped 2.25% and the Nasdaq fell 4.26%. This was caused by investors hoarding cash for the SpaceX IPO. Tech stocks like Nvidia and Broadcom struggled. However, crypto is recovering. Bitcoin is up 2.02% and altcoins are following. Gold is also doing well, up 0.65%. The Federal Reserve is in favor of higher rates if inflation stays high. This creates uncertainty. The jobs report was strong, which pushed rate hike odds up. We need to watch the Fed's commentary on private credit stress. If private credit fails, it could trigger a recession. This is a low probability but high impact risk. Investors should watch for signs that cash flow stabilizes next week. This would be a buying opportunity for high-quality assets. The market is in a managed state where nominal stock highs coexist with available cash in the market crisis. Eventually, hard assets will surge as the dollar weakens. This is a future scenario. We need to watch the SpaceX IPO capital flow and cash hoarding levels. If cash hoarding continues, stocks will struggle. If cash flows back into stocks, they will rally. This is a key turning point for the market. Thanks for watching Market Pulse Daily.